So next up, we're going to talk about green investing. We spoke briefly about that just now. China's very involved in that. And we'd like to welcome our expert panel on stage with Mr. Kelvin Chow, CEO of Lendlease Global Commercial REIT, Mr. Adrian Chu, SVP of Sales and Marketing Strategy for Southeast Asia at CSOP, and Mr. U-Jin Lim, the ETF Business Development Director at Nikko Asset Management. We're also pleased to have the Deputy News Editor of the Business Times, Mr. Kenneth Lim, to moderate this panel. Please welcome them all with a big round of applause. Over to you, Kenneth.
Hi, everyone, and thanks so much for attending this talk. We have with us today Adrian, who is the Senior Vice President at CSOP Asset Management, Kelvin Chow, all the way to the left, who is CEO of Lendlease Global Commercial REIT. And of course, to my left is U-Jin. U-Jin Lim, he is the ETF Business Development Director at Nikko Asset Management. We are here today to talk about green investing. I just wanted to share that green investing is something that has been growing tremendously. I was just looking at the numbers. PwC did a study recently, last year. In 2015, global ESG assets under management was $2.2 trillion. This was in 2015. In 2021, it was more than 8 times that, at 18.4 trillion. So from, in just 6 years, it moved from 2.2 to $18.4 trillion globally. By 2026, which is 4 years from now, PwC expects the ESG assets under management to be between 17 and 29% of the total asset and wealth management market. So those are pretty serious numbers. So I guess today we are here to talk about what green investing is about and how to navigate that space. Now, one of the fundamental questions when we talk about green or sustainable investing is how do you define sustainable? So, Adrian, I'm going to go to you first. Now, CSOP launched an ETF based on the FTA, the FTSE Low Carbon Index. And this uses a screening methodology to find companies that meet its criteria. Maybe you can explain to us why you decided to go with a screening index and why this particular index?
Right, so thank you, Kenneth. We have an ETF that tracks the FTSE Asia Pacific Low Carbon Index, right? So what it does is that we have did a lot of brainstorming and we did a lot of research on how to make this green investing very simplified to understand, to be very transparent to the investors, to give them easy access. And so we found that there are troubles, there are certain problem is one, where is the area or the region of the world where there's constantly giving us positive GDP growth? And we found that Asia Pacific has been the region that contributes the largest GDP growth globally when compared to the West and the East as well. And then next is actually, how do you simplify, do we tackle the E part, the S part, or the G part of ESG? Investors would be bored to death when we talk about ESG. So we found that something that's very measurable, there's a lot of data to it, would be the E, would be the environmental. And environmental affects everyone globally. So we found that, that should be the focus when it comes to green investing and ESG. And next, there was a common belief that once we go green investing, investors have to sacrifice, returns. So we did a lot of data back testing, and we looked through, since 2015 to now, and found that there is a existing. We came to a conclusion that Asia Pacific is the region that gives the highest GDP growth. So that's where we want to narrow down. And then we looked through how FTSE, we decided to partner with FTSE because they has a very robust kind of methodology. They have a very comprehensive database to really look through and to have the larger database, definitely the truer in terms of of the methodology in a sense. So we took the universe of the FTSE Asia Pacific Index. There's about 2,000 names. And then we went through an elimination kind of program screening where if the companies are dealing with tobacco, you're out. Weapons, you're out. If you are against the UN, the principle, you're out as well. Thermal coal, definitely you're out. So then when we pare it down to about 200 names, that's where we decided to award investors with, the companies by giving them a carrot in the sense that if you have been successfully reducing fossil fuel and carbon emission, we will give you more weight to it. What does this mean is that when an investors invest into the ETF, more allocation will be given to your stock price. So that's why how we reward companies in that sense. And having said that, we found that by having this elimination program, screening going through, the Asia Pacific Low Carbon Index outperformed the traditional Asia Pacific Index itself. So that also debunk the myth that by going green, by doing well, you can actually do good as well. In terms of a portfolio.
Okay, that's interesting. So when you talk about outperformance, what kind of time period are we talking about for
Yes, so since 2015 to now, it's a good 7-year kind of data. We found that it has been constantly outperforming the traditional benchmark. Yeah.
Okay. There have been some criticisms, right, about screening methodologies. And I think the criticism is about how much impact that are they actually generating, especially when it comes to developing markets like Asia, where a lot of the companies and communities are actually very carbon intensive and very brown. I think one of the criticisms is that if you simply exclude them, if you exclude thermal coal, if you exclude some of the high carbon sectors from funding, from your funds, you are simply depriving them of capital and not helping them to actually transition to become greener, right? So I guess, in the fund management space, there's always that kind of push and pull between a screening methodology like what the ETF is using and a more engaged kind of role for the fund managers. So how is this a valid argument? I mean, how do you reconcile that with what your ETF is doing?
So I think when you talk about green investing, is a whole new kind of transition into how everyone is doing business and everything. And there are certain old habits and certain new habits as well. And as we transit from old habits to new habits, there's no right answer. It's very difficult to say whether the screening is right or wrong. If you, for example, last year, if you will do a 60-40 in terms of equities and bonds kind of portfolio mandates, the old way of doing portfolio construction is that in 2022 you'll be down 18% because bonds and equities were having a bad year last year, and that's old habits. So what I'm trying to say is that the screening is difficult to say whether it's right or wrong, but looking through data and we're expressing through the vote using our wallet in a sense. This is how most of the investment portfolio managers will do. Is actually the screenings help them to cut through the noise, to look through the data to ensure that the data is relevant to the benchmark that we're trying to do. And the benchmark right now is actually the E part of ESG, which means I want to contribute positively to the environmental. And that's where we look at the low carbon, the fossil fuel and the carbon emission benchmark. And with that data, we cut through companies that are, within Asia Pacific that are profitable in their old ways, and yet, like you say, we are actually engaging them by telling them that, hey, you got to change your ways to be more operationally efficient. And so that's how it is. We use this methodology because this gives us the truest, most accurate as of now kind of data.
Okay. U-Jin, I'm going to come to you next. So Nikko has launched a thematic ETF, right, which is based on the China electric vehicles and future mobility. So talk us through this decision to go with a thematic approach as opposed to a broader screening methodology.
Yeah. So, morning everyone. The ETF that we're talking about is China EV. EV stands for electric vehicles. How do we come to EV? Is because if you take ESG, if you add S plus G in the alphabets, you actually get V. You guys didn't believe that, right? No, this is just a joke. That is not how we came out with an EV, right? I think what Adrian mentioned about cutting and slicing, getting a good methodology to be, to come up with a product that is ESG or sustainable or green, whatever the label, it is an extremely difficult process, right? And asset managers, Nikko AM, when we came up with it, we faced the same issues. And what you see is us trying to approach, ETF investing, trying to distill down what it really means when we talk about investing. And we thought a thematic approach would be a good way to approach the same problem that Adrian is facing, right? We wanted to lay a benchmark because internally, Nikko AM, we wanted to be seen as a good corporate citizen, good global citizen, i.e. meaning in the 5-10 years in the future, what would our world look like? And I think the biggest issue here is climate change, right? We were just joking on the way here. If Shenton Way, if we had to go through a flood, we couldn't drive. We had to take a sampan here, right? Will we be a lot more conscious about ESG, right? And really, it's just us approaching the same question from a different angle. We thought thematic approach would be well, not easier, but we wanted to give investors. We wanted to give them a physical flag, placement, right? If we think about, maybe I can do a poll here, right? Just a raise of hands. Your next car, how many of you are already driving an electronic vehicle right now? 1 out of, I guess the capacity is about 80. So that's less than 2%, right? And okay, your next car, would you consider an EV? Consider. So I'd say about 5%, right? But globally, the statistics, Adrian talked about, looking at the stats and stuff. Statistically, globally, for the next car, McKinsey did a survey. It's about 15% of future buyers would be willing to put down money on an EV. In China, that rate is about 30 to 50%. So new car sales in China, for every 10 cars sold in China today, 30% to 40% are EVs. So in that way, then we thought it would make it easier for us to relate to the men on the street, the investors on the street, right? We cut through the noise, as Adrian said, as much as possible. We give you a clear example of what it means to be green, what the future would possibly look like, and then lastly, putting your wallet where your mouth is. And we think that coming up with an EV thematic would be the best way to do that.
Yeah, I guess when it comes to green and ESG investing, you're really trying to fulfill 2 objectives, right? In a normal fund, we're just looking at returns, purely returns, but with sustainable investing, there is a second objective there, and that's the impact part of it, right? And I guess the challenge for you guys who are designing the products is how do you accomplish that second objective as well? U-Jin, I did want to give you a chance to talk about the fact that your ETF is a physical ETF, right? Yeah. Maybe you can explain to everyone the difference between that and a synthetic ETF and why it matters with ESG ETFs.
Oh, okay. So there are different ways of tracking an index. What our ETF uses is what we call physical replication or full replication method. It means the MSCI index that we track has got an underlying basket of 50 stocks listed on the Shenzhen Exchange. Shanghai Exchange, Hong Kong Exchange, etc., etc. And the 50 stocks that the index has in its basket, our ETF also owns like for like in the same weightage and percentages, right? But there is a synthetic approach that other ETFs can employ. That's usually when the underlying basket it's very big. You can't, for example, if an index tracks 1,000, 2,000 of stocks, it just does not make sense operationally to also have a full replication, i.e. the fund manager buying those 1,000 stocks. And what happens is that there's a synthetic approach. It becomes a bit more of an issue now with ESG, is because I think there's some news or some changes in how asset managers are required to recognize whether a fund is ESG or not. Because now they're saying it's like if it's a synthetic replication method that your ETF or your fund is employing, it would not be considered ESG, and that has an impact on the future and growth of that fund. So by a fund like ours being full replication, employing full replication, that helps us avoid that hurdle.
Okay, so from a portfolio perspective, where do these thematic investments fit in terms of a portfolio, in terms of the strategy and objectives? Would you expect thematic investments or thematic funds to form the bulk of a portfolio, or are they riskier than investments based on a broader universe? And actually, I'm going to open this to Adrian as well, because I know Adrian has spoken about this before previously. Yeah.
So I'll start and then Adrian. So that's something that we Adrian and I, we're basically the same two people in the same boat on an ocean, and we're trying to navigate it as best as we can. And so the question is, how much do you allocate to thematics, right? Whether it's cloud computing, mega trends like electronic vehicles, future mobility. I think where we see right now, as in the investors into our ETFs, they really look at it as a tactical asset allocation tool. I mean, if you have got a view that in the next 5 to 10 years, that the electronic vehicle market, the future of mobility, in our case specifically China, is going to change, and you want to get a foot into what we call future-proof sectors, for example, lithium battery production, lithium-ion battery manufacturers, potentially high-speed railways, smart mobility, for example, electric vehicles. And that's where you think you want to be involved. That's where we say tactical, because it's not, by the term itself, it's not the bulk of your portfolio, but it's where they can easily express a view. And they like ETFs because it's highly liquid, it's easy to trade. As long as you've got access to an exchange, you can buy. And if your view changes, you can also sell easily. It's also a cost-effective way of ensuring that you get this tactical allocation right? And if things change, and we do know that megatrends evolve very fast, right? You could also always have an exit. That's always important.
I totally agree with U-Jin here, my fellow speaker, is that we're in the same boat when we come to green investing and when it comes to tackling climate change. Like you say, EV is a very thematic, relatable kind of sector, because everybody is using EV. You can see a Tesla or a BYD on the road, and it's very easy to be relatable, tactical, right? We come from an angle in the same boat, but a different spectrum, that we actually do more of a market kind of return, and in this part, give you exposure to an ETF, via ETF to the Asia Pacific growth story, right? And we add a bit of spice to it in the sense that whatever that your investment into the growth area of Asia Pacific, there is a green element to it as well. So this fits very well into your long-term portfolio, where you can actually have different country allocation. So both of us fits very well into your both strategic kind of portfolio allocation and your tactical allocation as well. And through this index over the 7-year history since 2015, When it comes to fossil fuel reserve and carbon emission, these companies within the ETF and within this index have actually reduced 60 and 90% respectively. So this data show that these companies are actually doing very well in terms of being more efficient, yet generating positive returns. So again, back to the tagline, you can actually do well by doing good. Yeah.
Okay, Adrian, I want to thank you for that wonderful segue. So I guess now I want to talk about, there's always this question about whether sustainability and green is just wayang, right? So I'm going to turn to Kelvin now, who is the guy who's actually down in the trenches and doing the work on sustainability. So Kelvin, Lendlease is known for being quite forward and progressive in terms of sustainability. So can you share with us, what drives that stance at Lendlease?
Okay. Good morning, everyone, and thanks for the questions. Okay, I think what we actually look at is really, we find that sustainability is getting more important. I think as the global warming become serious, I think as you now go out, you don't really know how the weather goes and all those things. I think that is something that we have to seriously address. And 40% of the carbon emissions came from the real estate and construction industry. So what we are looking at is how we can sort of effectively manage that. And for us, of course, we also feel that working towards a greener and more sustainable kind of cultures, environment is part of our DNA. So what we do is that we continue to invest on that perspective. And for us is that we also see that the governments, I think few things that we have noticed, I think from the banks, from the governments, from the indices, and also from our fellow ETF, companies are looking at that as a very serious kind of things going forward. So what you look at is that the mega trends has changed because the government is looking at things that can actually continue to build on the sustainability element to the country. And when they want to see, they impose fine like the carbon tax, all those things to sort of add more cost to the operations. And also they're using some kind of fiscal and monetary policies to encourage people to go on green and achieve sustainability. And also for the banks, actually are also giving more loans that is linked to sustainability, which that itself will provide a good savings to the borrower, which is like us. So if you achieve some kind of green targets that is set with the banks, I think you can achieve that kind of savings. I think there are some things that incentivize us to go forward to that. And we believe that with that, we can actually have a good savings. And I'm not sure everyone know that Lendlease Global Commercial REIT is one of the has issued one of the largest green sustainability loans among the REIT in Asia. And out of our overall portfolio of loans, I think 62% are sustainability linked loan. And that will give us saving in $1 million, not in tens of thousands. So that's why we actually work very hard to achieve that objective. And we are the first REIT in Singapore that achieved net carbon zero. So that means that we already achieved that objective, and the saving will soon be able to reflect as a part of the revenues to be distributed to the unit holders. I think lastly, or other last 2 points is that being green is also help us to go into certain of the indices. Be it sustainability indices, ESG indices, and all those things that will improve our liquidities and tradabilities among these communities of investors. These investors would like to have companies that focus on this aspect, and we are one of those, and they were able to choose us. I think lastly, of course, the ETF communities, which is basically my 2 panelists here, I think they will actually also look at us as one of their choices when it comes to investment. So I would say that I think from the monetary perspective, we look at how we can achieve savings. from the banks, links loans, or we can achieve some of cost saving from some of the initiative we have when we work towards the ESG perspective, and also improve the tradability and liquidity, which actually help the general investors when it comes to making investment choices. I think that's what we are trying to do.
Okay, yeah. So you get cost savings and you get access to capital and it's good business, right? Now, I know there's a lot of concern about greenwashing, and we are very fortunate because Kelvin isn't just a CEO; he's also a very experienced CFO. So, Kelvin, I want to ask you, how do companies greenwash? And I'm not saying that Lendlease is doing greenwashing, but I'm just asking, from your perspective, how do companies do that, right? And how do we detect that?
Of course, there are a lot of well-known companies going and being detected as doing the greenwashing, all those things. I think these are things that I think some company is trying to be one foot forward, but actually they are not actually working towards to achieve that. I think that's something that I think we can easily detect by, first of all, looking at what are the statements and what are the things that they try to claim that they are doing, and then whether they are actually leveraging on any kind of credible or reputable kind of assessor assessing to what they are trying to do, certify them on what they are trying to do. I think the third thing is that, of course, you can look at you can go on and actually they should actually go through some kind of audits. It's just like what we are doing when we claim that we have achieved certain kind of metrics. We do actually have an annual audit to make sure that these are numbers that are satisfied by the auditors. I think we do actually go through the audits. And also benchmarking. You look at how among the different companies within the same industry, are they really doing something different? For example, maybe one of the companies might actually claim that by using recycled plastic, they can actually reduce some of the waste and all those things. But when it comes to the benchmarking, actually they are not significantly drop on the waste. It means that they are not actually doing the right things. I think the last one is, of course, sustainable reporting. I think SGX recently has sort of make it mandatory kind of process for listed entities to actually have this sustainable reporting. At the same time, they come out with this SGX ESG norms thing, which actually has around 27 core metrics that they're trying to align all the different company to have this standardized way of reporting so that to facilitate investors to able to understand the company better. Of course, these 27 core metrics might not be encompassing yet, but it's a good start so that we can generally look at the company and able to compare across within the industry. Although, but of course, certain industry has different kind of metrics which is relevant for them. So that is probably the second phase that SGX might actually look into it. But at this moment, I think with that standardization, at least it facilitates investors to actually seriously look at it and see how they can invest in it. I think all these things, if it come into place and everyone trying to actually monitor and assess to it, I think it will help to reduce the possibility of greenwashing.
Okay. Yeah. So I guess to your point, comparability is quite important, right? Because in order to do your benchmarking, you need to be able to compare across different companies. Is that something you are seeing, and is that something you guys are doing?
I think the comparability has to be based on two levels. One level is within yourself. How do you compare from your previous years or from your targets? And then how do you sort of achieve that? And then in the case, indirectly achieve a good return at the same time achieve the sustainability targets. I think the other one is comparing external, and depending whether, of course, that one you have to moderate it because, if let's say you're talking about REIT sectors, everyone hold different portfolios and in different countries, and then also the age of the property is different. So you have to moderate and see whether by adjusting that, you are still outperforming the others. I think that is important. Actually, that set you a target that you can look forward to and how you can become market leaders. as you achieve the targets that you're setting.
Okay. Adrian and U-Jin, I'm going to come back to you. What do you think are the most consequential trends in sustainability in Asia? And where do you see the most exciting opportunities and the most troubling risks in this space? U-Jin, do you want to start?
So I'll start with most exciting trends. I'm not selling my own koyok. I know I've got an EV ETF, but I think this is where us as a company, when we decided, how can we help investors at least start the process of understanding what it means to be green, what it means to distill down whether being green is good for your wallet, or good for the company you're investing in, right? It's really the electric vehicle complex, right? Future mobility. How are we going to see ourselves travel from point A to point B in the future? And is that future greener than where we are today, right? And I think if we look at future mobility within the automobile industry, I think the only credible option we have right now, using current technology, current internet connectivity, for example, would really be electric vehicles. I know there are hydrogen vehicles out there, other forms of technology, but they are not really ready to be mass market at the moment. So, I think the electric vehicle space or future mobility space is something that we see value in, that we have put money in because we've actually invested in launching an ETF like that. But that should not constrain you from continuing to look out for other green or sustainable trends that is good for not just the companies involved, but good for our future, right? Just now we were just joking, Adrian and I think we've got 2 young kids, right? I think the conversations with the younger generation is something that surprises us. Right, there was a brochure on my table. It says electric vehicles and future mobility. My son asked me, he loves vehicles. He said, "Are we going to buy an EV car in the future?" And I said, "Yes." And out of his mouth, he said, "Okay, that's good because EV cars do not pollute the environment." And that encapsulates us, right? In a nutshell, what are we trying to do here, right? And I think, as an asset manager, it's really a banner for us to say that it's a show of intent, it's a show of commitment, it's to open the doors to possibilities to, if you do not want an EV exposure, but you are talking about, maybe solar panel ETFs, and CSOP goes for that, right? If it means a cleaner future for my children, for Adrian's children, I think we have done our job, right? And it goes back down to, are we committed? Yes. Are we willing to put our wallets behind our mouths? Yes. Right? Is green investing here to stay? Yes. Are we doing things to accomplish that goal? Yes and yes. Just that we are finding our way. Give us, as I said, we're trying to different approaches, different ways to get to that future.
I think I have to agree with you that the most exciting trend right now is the whole new, different way in how we transit from the old ways to a new way. And, like you say, we have to cut through the whole big issue of how we're going to be reducing our carbon footprint, care for Mother Earth, and we still yet live the way we used to live right now. But we are depending a lot of fossil fuel for our needs to travel and to consume, right? So I think for our part, it's actually we took a bigger, wider scope in the sense that we cover banks, stocks that's actually greener. We cover technology stocks and disrupting the way we do things and how to make it more efficient. We covering not only just different sectors, we also cover different countries that are very committed and highest potential of adopting, climate positive change. And so that's where both of us coming together to tackle different part of the same issue. We are coming in from the angle where we're going to cover the whole spectrum, different sectors right now, from technology, banking, consumer discretionary, they are all changing their ways to be greener. And some exciting trends, like say EV, travel more efficiently, how we change our habit to reduce on fossil fuel, solar, wind, hydro, nuclear. So these are some of the ways as well for our energy needs. Yep. I think there's one about troubling risks.
Yeah. So I wanted to ask you guys about the risks that you see in this sector as well.
So I would humbly say that we are frogs in a slow boiling water that we do not, or maybe only our younger generation knows, but we as the older generation, we are the custodian of the mother planet. That we have to acknowledge. I tell myself that we are the frog in the slow boiling water, that every year the temperature is rising, right? And what we do is actually we don't change our way, we just turn on the aircon, right? So what we do is, we got to acknowledge that if we are living just in one earth, and we don't do something about it, just one small positive step is actually one step ahead. And if we don't do it, the most troubling risk is that they're going to cause a lot of cascading down in terms of the supply chain and how we just don't change. What the result will be famine, right? When famine comes, conflict will happen, and then there will be loss in terms of your investments and stuff like that. Generally, to summarize, if the troubling risk is the four horsemen, the four different conflicts will happen to us if we do not change our ways right now.
Yeah. Maybe on risk, maybe I'll try to boil it down to investment risk on the particular asset class or sector or thematic in my case, right, that you're investing in. So there is one risk that we have to acknowledge, is that if we're looking at thematic and we're looking at EVs or ESG, there is a possibility that, let's boil it down to my expertise, EVs, right? There is a possibility that IT, right, information technology, the dependence on this particular sector will change very fast, right? So that's an investment risk that you should be aware of when it comes to investing in thematics. It could be cloud computing, it could be AI, it could be ChatGPT, right? Tomorrow, one company's star may fall, but if you're invested in an ETF, because you're tracking a basket of the top, let's say 50, 30, 100, right? As one star falls, there's always another star that comes back up. But the risk is that there will always be people falling and rising at different rates at different time, really because it's a symptom of, well, the markets that we're in, the dependence on IT, dependence on intellectual property, how much incumbent companies can protect their market share, etc., etc. So there's always a risk. There's also a risk of the entire sector, the broader sector that any thematic ESG ETF would be looking at. There's broad sector risk. In the case of the EV ETF, it's the automobile industry, right? It's a very competitive industry. I think there's one point about whether being environmentally friendly, EVs being environmentally friendly, does it help the pocket? I think there's always this government tailwinds that's helping the economy along, that sector along. So it does make sense to be invested in the sector. The risk is what happens when government support starts to withdraw, right? Can this industry stand on its own? But it's unlikely, because we are seeing that across the world, not just in China, Europe, the IRA from the US, Inflation Reduction Act, it seems like they can disagree on a lot of things, US, Europe, and China, but at least on climate change, on trying to ensure that we do not need to swim to Shenton Way, right? Governments are there, the tailwinds are here to stay.
Okay. I guess we'll go to Q&A, and there are a few questions that are kind of touching on the same themes. And one of it, I guess the main theme here is, how do we achieve that twin goal, right, of getting my investment returns as well as achieving the sustainability objectives as well? Maybe Adrian, do you want to start with that?
Yes. So I think if you take a brochure from my booth, is that we have actually did extensive kind of brainstorming and then research to find the sweet spot between being green and yet having very positive returns. And that's where we, again, just to reiterate that we found that Asia Pacific is insulated from the East and the West kind of fraction right now. And we have a lot of in this region, Asia Pacific has a lot of free trade agreement. The young investors are here, the young consumers are here. 55% of the consumption is actually done in Asia Pacific itself. So we're in a very nice sweet spot, and that's where to answer your question is actually in terms of giving us the best potential for returns. That's where Asia Pacific would be, right? Based on the current geopolitical tension right now. And then we want to say that when it comes to growth, that probably becomes waste and high carbon emission. So we want to put on the principles of having low fossil fuel, low carbon emission. Look at these companies around here who are doing that as well. And we found that 216 names out of the traditional broad-based 2,000 names are doing that. So the likes of the banks, countries like Japan are actually embracing to be, reducing their carbon footprint. And we found that this our own ETF has actually potentially meet that sweet spot right now. Yep.
U-Jin?
I think it's always a very difficult. I think that's really the challenge, right? Is being green, good for your wallet. I think it always boils down to the issue is distilling. How does being green translate to the company making money? I think what we should try to cover and raise awareness as well is there is cost to being green. I think we cannot deny that, right? It's easy. Let's say the EV industry, right? It's easy to continue for Toyota to keep on doing stuff that they're already a market leader in the world. It's easy for them to continue trending out ICE vehicles, right? It's expensive to research and develop a new EV car or any technology that tries to help out, doing new things, right? It's a process. It's an expensive process, right? But it needs the company to be able to get past that point where cost becomes a revenue generating function. And to do that, I think at the beginning, we do need a lot of government support. We do need, China coming out with a band-aid and saying that Xi Jinping's, one of his signature policies is that he wants to reach a net zero emissions target for China by 2060. He puts a number to the number of EV cars he wants to sell on the road. 40% of all cars sold in China by 2030, and that's not very long away, must be electronic vehicles. And that helps the entire sector, get to the point where cost isn't a consideration, it's how much revenue they can make, right? So I think the point here is that there are sacrifices to be made, but those sacrifices are worth it because once you get past the initial painful phase, I hope that in 7 years' time, if we do come back for a panel, this question won't be asked anymore. I hope the question would be, what's the positives to revenue I can get from being green, right? That means maybe the question on the pressure on us would be, I need you to be more green because the relationship is more green equals a better run company.
Okay. We're running short on time, so I'm just going to direct the last question at Kelvin. So Kelvin, there's a question about how do you assess the environmental impact of a company before putting in your investment?
Okay, I think before I go to the questions, I think I just want to emphasize that, while we are questioning ourselves whether we should invest in green or whatever, I think very importantly, I think what we are trying to do is to be a good corporate citizens, also help, do our part to sort of sustain, to help on the climax, to reduce whatever impact that it is on what we have been doing on the past. I think the key things that we want to also emphasize, be it for the REIT or be it for the ETF, is to actually make your investment stay relevant and future-proof yourself on your investments. So what you're investing now, or what you're going to invest, and how you're going to assess on the investments, on green investment, is really on how we look at it and how you can actually assess, after what we have shared with you, and you can actually use it as a way to evaluate. Okay, back to the questions on how we go, that your question that you give to me. I think mainly for us is that we will always look at, because we are a real estate, we look at properties, and the properties could either be developed by us or we can actually purchase indirectly. And most of the property that we are trying to acquire, we will look at whether they have sufficient green element for us to future-proof ourselves. And in terms of returns-wise, I think there are a few key things that you can generate positive returns. If let's say the properties are able to help us to avoid some kind of energy usage or reduce some of the energy usage, I think that is a property that we feel that we can achieve the green element to it. I think we will tend to look at that properties. And also, we also looking at the properties, whether it can generate kind of green energies. For example, now I think the electricity rates actually is getting higher. Maybe getting a green energy from the solar energy actually help you in terms of reducing your energy usage. And also, lastly, of course, looking at ways to replace your energy with a green energies. I think these are things that we've been constantly doing it. In fact, when we actually try to acquire a properties, we will do energy audits to make sure that these are levers that we can work towards to reduce to improve on our carbon footprints when you put into the portfolios. The overall idea is to actually continue to provide a regular return to the investors without compromising on our sustainability footprints. Yeah.
How important is the sustainability report and all these disclosures when it comes to making an assessment?
I think to us it's very important. We want to, because we are getting a lot of investors has been emphasized on the sustainability part nowadays when we meet up with them. And although, they actually want to have the cake and they eat it. They want us to achieve the sustainability at the same time. They want to have the returns that we're trying to achieve. I think we can understand where they're coming from. So when we make the kind of decisions on whether we want to buy a properties or whether we want to make some kind of capex investments, it always when we always actually make sure that it actually, when we make the sustainable investment, it has to be operational efficient and improve the operations at the same time achieve our sustainability goals.
Okay, I want to thank all of you for your time. And for those of you who are still thinking about green investing and sustainability investing, do check out the products that they have. And pay attention to the sustainability reports. I think those are always worth looking at. Okay, thank you very much.
Thank you to our panelists, Kelvin, Adrian, U-Jin, and of course our moderator, Kenneth.